Hi, welcome to this video today, which is our weekly Forex forecast. It's the 5th of November and it's Sunday. What we're going to be looking at this week is a few high probability trades in our view. Now, in terms of last week's forecast, we looked at over 20 charts, okay? This week, I'm doing a smaller number. They're the pairs that really interest me, okay? And whilst I analyse a lot of pairs, okay, I do over 30 a day, I will normally only ever be exposed in possibly 2 pairs, or maximum is normally 6, okay? So just focusing on the pairs that I really like in the week ahead. Now, in terms of last week's forecast, we're saying, we are basically US dollar bullish. We are, okay? Dollar had a good week last week. The only currency we're not bullish the USD on is the yen. The yen is getting ready for a major move to the upside in our view. And we're very interested in the yen longer term. I think it's got fantastic profit potential. Now, in relation to 2 trades I really do like, I did them yesterday in a video, which you can check out, which are Euro JPY and USD JPY. For us, they're both going down on the yen. Now, also in this video, what I want to focus on is trading high impact news events. I mentioned the Bank of England last week, and we were saying we didn't expect the pound to go up even if the Bank of England raised rates. And a few people have asked me, how do you do news event trading? Just go through it in a little bit more detail. And one thing I will say about news event trading is we'd never ever wait for the news to come out and then trade it. We've normally got a position in beforehand. The reason for this is we've decided what we think is going to happen. We'll let the market do its work. If we wait until after the event comes, so to speak, you very often don't get a high odds entry. Now, also what I want to focus on is simple technical analysis. I'm sure regular viewers know my view that I think a lot of traders make their technical analysis way too complicated. The simpler it is, the better. And I'm not obviously in agreement, let's say, with looking too intricately at a chart. Simple analysis works best. It's got, you can generate some really great high probability trades. We're going to be looking at getting in on turning points and also on existing trends. Right. Now, what I'm going to do now is I'm just going to go through how to trade a high impact news event. I'm going to be looking at Euro GBP in relation to this. And I'm going to be looking at a few dollar pairs that I like to be long of next week, and some yen pairs as well. So let's go to the charts. We're on the Euro British Pound daily chart. Now, last week, I was talking about, we were in the Mem Centre, GBP USD. We thought it was going down, already a position in the market. GBP JPY, we've made up our mind on that one as well. And I was saying, in terms of the Euro British Pound, we had a short position on. And I said, we were getting ready to switch to a long. And in terms of this pair, the setup here is such a good risk-reward setup technically, once you work out the discount on the news, okay? And what you want to do is work out, as best you can, how much is expected, and is that discounted in the price, okay? And it's not just the Bank of England meeting we've done over the last couple of weeks. We did ECB and Bank of Canada. We worked out the discount, went against the majority, and the trades worked out. I'm not saying they're always going to work out, but if you just try and work out how much is in the price already and use a little bit of common sense, then you can generate a high odds trade. Now, in terms of the Bank of England, expected to raise rates, that's discounted, okay? I mean, I think all traders expected that. Bank of England expected to be hawkish. That was the majority view as well in the days coming up to the Bank of England meeting, talking about future rate hikes by the bank. That's discounted. But in terms of this, okay, Bank of England expected to be hawkish. If you just look back at the previous central bank meeting or Bank of England meeting and see what they said they were very cautious about raising interest rates. So why are they going to turn hawkish? Doesn't make sense, or didn't to us. So we think that, yeah, basically, if they had been a little bit hawkish, there was little upside in the pound, but that, caution from the BOE made us even more, kind of convinced that, pound would probably have a turn down. Now, in terms of the technical setup, here, I like this technical setup. We use it a lot, and it's a good one to use. Very simple to understand. I've actually isolated the candle here, day before the Bank of England meeting. The selling exhausts, and it exhausts through a level. There it is. I could take the chart a bit further back. 87.50 has provided good support. Goes through the level, comes back nice and blue. Well, that's pointing now to a nice high odds entry, because you know that, if things go as expected, the price is just going to run, okay, pretty quickly. So your stop can be very, very tight. You don't want it too far away here, because, what you're expecting, or what we're expecting, is that it's going to run in our favour. If it runs against us, we're wrong. We want to be out with a very minor loss, okay? So off we go to the upside. It's a nice move for us, about 130 pips, and we've come out into the 20-day moving average, which is also a round number, which is 89. 20-day moving average, you always expect prices to gravitate back, or we do, when you've had a nice sell-off like this. So it's an extremely simple setup. And you don't have to go too far back on the chart and go through all what happened ages ago. It doesn't matter. You focus on the chart right now. This candle's important. This level's important. That's it, in my view. Now, in terms of this was just a swing trade, nothing more. I've got a long-term Euro GBP bearish bias. Also, another good thing about trading, central bank meetings is you're going to get a result quickly, okay, which is what you want, okay? You're going to be sitting in trades for a long time with nothing happening. You know that when you trade these sorts of meetings, we like to allocate a little bit more capital and basically get a result, right or wrong, okay? Doesn't matter. If the odds are on our side, we'll have a go. This one worked out. Obviously, they don't always work out, as I've just said. But that's the way we would trade, high impact news. And generally, we like to go against the majority. Right, let's move to the next chart. And I'm going to do on the chart of, Canadian dollar, US dollar first, because we're going to look at the COT net traders positions. I'll obviously reverse it round the right way to USD CAD in a moment, but on the COT it's always foreign currencies first, okay? Now, if you're a new viewer and you're unfamiliar with the COT, there's an explanatory video beneath this where you can learn more about them, and also you can join our free mailing list. But in terms of this tool, it is one of the best it's the best in Forex for us to back up our technical analysis. I'll just explain briefly for new viewers how we use it. Commercials in red, these are smart money hedgers, okay? Large speculators in green. Okay, what we want is the smart money commercials to build up big positions against the speculators, and then we'll look to go with the commercials. I've just drawn an example here, this first one. The commercials, look at the size of this big long position. Specs drop short against them at this important market bottom. Prices break up in favour of the commercials, the specs get hit, okay? But let me get into this zone here. Commercials think prices have run a little bit too far. They start shifting their hedges, and then they start going aggressively short. Now here, where I've drawn this arrow, that's a 5-year net long extreme for the speculators. It's actually a 5-year net short extreme for the commercials. So we were expecting a breakdown. So the CAD to go down, the USD to go up, and you can see the CAD broke down, USD went up. But this week we got a little bit of a retracement, and what we can notice, the speculators have been stopped out of a few positions. Commercials have moved a few hedges, but the groups are still pretty diverged. So we're going to view the dip in the USD as a buying opportunity. Now, In terms of our long USD CAD position, we got stopped out at a profit. So now we've got to find a re-entry. So let's look at the USD CAD chart and look at some potential re-entry. Dollar Canadian dollar daily. It's been one of our favourite pairs for a while. I'm sure regular viewers know that by the amount of videos we've done on it. And yeah, we've been stopped out now. We've got a decent profit. And yeah, our reading of the COT data, which we just looked at, points to more strength in the USD. So we want to get back in. Now, in terms of the level I'm just drawing on the chart now, this is where we had that 5-year net short extreme built up by the speculators, i.e. they're the most long they've been of the Canadian dollar for 5 years. As soon as we fall down here, we find support around this 121 level. We want a nice blue candle. We get it here. We're long off the upside. Find support at the 20-day moving average here. Then we get above 128. Now, in terms of our last video, I was saying, yeah, we want to basically lock in some profit. Okay, so I bought my stop up from 126.65, sorry, to 127.65. We get taken on Friday. Yeah, good profit though, 600 pips. But we've read the COT data. We think there's more to come on the upside. Okay, I'll go to my target in a moment. But in terms of getting into this trade, how are we going to do it? Well, we're going to get in either on weakness or on strength. I'm just going to explain the way I do it, because obviously we don't know what's going to happen yet. So here is what I consider to be a good support level. Okay, these two candles here. This big blue candle gets to it, and then these push away from it. You've also got the 20-day moving average, which should provide support in a strong uptrend. Look at the support it gave here, 3 candles and the push off. Okay, I expect the same again. If we were to penetrate the 20, this line, and close below 126, my bullish view of USD CAD would be negated for the time being. But yeah, like I said, I do think this is just a natural retracement in a bull trend. So what happens if we go lower? Well, basically, let's say she dropped below 127. Okay, I would just buy. I'd wait for strength back through the 127 level, 127.30. I want to see some strength. I don't just want to presume that this level is going to hold. So I'll come back through 127.30, let the round number get cleared. Stop would be behind, obviously, these, the 20 and the support line, but I'd probably drop it back. Well, I would drop it back behind the next round number. So 125.65. So that's what we'll be looking at if we drop lower. But if we don't, I want to come in on strength. Okay. So from my point of view, it's going to be this 128 level, significant. You've got that diagonal line there. I can cross it here with a straight. I always like to have 2 trend lines. So got double trend line resistance. I wanted to get through both levels, okay? So basically I'm going to come in through 128.30. Still put my stop back here though. And then look for follow on. Do I expect these candles to provide resistance? No, I'm not really too worried about them at all. Yeah, just simply looking at the COT. We know that some speculators have been taken out on stop. There's plenty more to be hit. This little retracement just looks like a natural one to me. Now, in terms of how the COT report looks, and in terms of weekly resistance, the level we're aiming at for is now up here, 135. Okay, there is some resistance at 132, but just because of, the position is still pretty extreme, this moment in time we'll be looking for a move up to that level, 135. So if what we do works out okay, it's going to be a really good profit in relation to the risk that we're taking. And in terms of getting in on this trade, just you don't want the perfect entry, you want a high odds entry. So that's why I always like to play those round numbers. For me, Looks like a correction, but we shall see. What shall we move to next? We will have Australian dollar, US dollar. Australian dollar against the US dollar. Just very quickly look at the COT positions before we go to the chart. Now, in terms of here, where I've noted speculative v commercials, they're at a chart extreme against each other in terms of their opposing positions. And the divergence is plus 10, which regular viewers will know we like to work out ourselves. And if it's above 10, that's always good for us, especially in this pair, because the commercials are really good at getting turning points. And they give us one. We get in near the highs. And the Australian dollar has obviously travelled down quite nicely. But what we are seeing is a little bit of a drop-off in speculative longs, a little bit of easing in commercial shorts, but the divergence is still pretty big. Okay, that points to a continuation of the trend. Let's go and have a look at the AUD USD chart and draw some levels. It's a position we're already in, but yeah, I think there's a decent risk reward entry for anyone new wanting to get in the trade as well. So let's shift over. Right, in terms of Australian dollar against US dollar, obviously we've done some videos on this as well, and yeah, it's had a nice decline in our favour, but yeah, we still think there is plenty more to come. Now, just for new viewers, what I've done is I've just noted, yeah, where the extreme was. And in terms of our entry, this is where the speculators and commercials really go against each other. Specs trying to take out this candle tail here. She goes up, she fails, comes back a bit to the 20, then pushes off again. This tail can't take out that tail. That makes us alert for an entry point to get short. We want to see some red though. We don't want to come in and just presume it's going to fall. We'll come in through this 20-day moving average. Okay, so we get the move through the 20-day moving average, 79.70 short. Move off nicely to the downside. We do get a little bit of a retracement, come back, try and take out the 20-day moving average. We struggle, then we fall lower. And this level here, saying it in the last video, very important. Okay, 77. It's a key weekly support level. You can see that if you want to go and look at the video I did last week. We were saying we didn't expect the 77 level to be decisively taken out and follow on to the upside, and we noted that the prices would probably fail into 77.50. Well, we do poke back above, but we failed back to the downside. Okay, so from our perspective, yeah, we think, yeah, we're going lower. Plenty of speculators still to be hit on stop. Some have been taken out, but there's more to come. Now, in terms of if you were to enter this position fresh, where would you want to come in? Well, it's a nice red candle. Any follow through, I think, is a sell. I'd ignore that blue tail, for example. I'd just come in through there, 76.40. Okay. Stop, I think, can now be behind this 20-day moving average. We're moving ours down to 77.70. So we've locked in a couple of hundred pips profit, whatever. And we'll see if she runs to the downside. Now, where could we go to? Well, in terms of weekly support, and again, if you want to, you can look at my previous video to see it. I'm just going to draw the daily support, which does line up with the weekly. 77. Next level beneath that is 72. So it's a decent decline so far. If we get to 72, that's another 450 pips. I know we've got to get there, but yeah, from our reading of this chart, that is where I think we're going. Got stopped now, tucked back behind the 20-day moving average, and we got 2 levels of resistance that the Aussie would have to get through, take us out on stop. I personally don't think the Aussie can do that. Of course, it could prove me wrong, but for me, decent risk to reward setup. So let's move to the next chart setup. Okay, we're on the Australian dollar against Japanese yen daily chart. Now, in terms of the yen, as I said, we're very, very bullish of the yen on all major currencies. And I spoke about, yeah, obviously Euro, Yen, USD, JPY, looking for them to come down. We got very bullish of the yen on those two currencies recently, okay, they haven't yet come to fruition. USD is still pretty firm on JPY. Euro's just come off a minor amount. But in terms of the commodity currencies and the weak emerging market currencies, we've been bullish the yen for a while, and this is one of my favorites to trade long the yen as a long-term trade as well. Now, in terms of here, I'll put a move above 90, where we get here. Specs for commercial divergence moves above 16. Now, there actually isn't any data from the CFTC for the crosses. We have to create that ourselves. You can see how we do that in previous videos. And we do about 30 pairs each week in the member centre, which you can go and take a look at. But divergence above 16, very, very good. And what we like about this technically, two nice strong blue candles, okay? And we move outside of a deviation of 2. And normally, on an aggressive move, you'll get a move back within the deviation, okay? But with this divergence on our side, we think this is the end of the up move in the Aussie. So just wait for it to come back through the round number, 89.70, get in. We expect it to go to the 20, goes to the 20, but she pokes up. But again, the divergence remains quite big on the COT, so we just don't think we're going to get back through those highs. We don't come down. This one surprised me a little bit when we came up and took the 20 out. But again, when we look at the COT data, the commercials and specs are not giving up, okay? Commercials are still adding to their shorts. Specs are adding to their longs. Commercials for us are going to win. Come back through the 20 and then down to here. Now, when we got down to here, I thought plenty of specs would probably be run on stop and it would just become a stop hit, okay? They'll all get rolled. Didn't happen. Come straight back up, but I pulled my stop down to 87.70. So taken out on stop, a couple of hundred pips, which is okay. But personally, I thought it was going to run on. But down, I mean, from our perspective, it's a good entry level on any follow through that though. You come through the 20, it's unconvincing, and you've come off a round number, important for us, as I've said before. Now I expect selling to come in. Now, if you don't know the COT, you might find this level here significant. I personally don't think it is. You might even think, well, you would from pure technical perspective. Look at 86 as important, but because of the divergence and how big it is historically, there is going to be a stop run at some point, and I think the stop run is going to come soon, and then we are going to run down to 83, okay? So, in terms of if you're coming into this trade, where do you put your stop? Well, you want to be back beyond the next level of resistance, which I think is here. Sorry if I just draw my line straight. Okay, so you're on about 88.70 in my view, and you've got a good risk to reward. I mean, I'll put 83 down. If I'm looking at the weekly chart, I can see it going down to 80 easily. But obviously you have to see how trades progress and so forth. Now, what you'll note again in terms of technical analysis is pretty simple and focused on what is going on right now, rather than trying to make too much of price action going backwards. Like, all that zigzag stuff you see, like that going down there is important to this going up to going down. It's some sort of pattern. Do you know what I mean? Nice and simple, way it should be in my view. I've said that numerous times. And of course, when you've got the COT report behind you, you're just going to see the chart in a completely different way, because you can judge the sentiment. You can't see that from the technicals alone. Right, this one here, I'm hoping they're going to be holding this for a good few weeks. Possibly we'll be trading the short side for months to come. Obviously, we'll have to see, but I'm very bearish. Regardless of right or wrong, I think it's a good, decent risk to reward trade. Right, let's move to the next chart. We're on the Canadian dollar against Japanese yen daily chart, and what I've drawn is a little channel here, okay? This is where the commercial v spec divergence reaches 14.6. Anything above 10 will do us. Obviously move up strongly here, and then we start to see the commercials and speculators, fighting each other, so to speak. Wide range candle day here, okay? Then try and take it out, can't do it. Try and take it out, can't do it. Can't do it again. We just want to move through the 20-day moving average, get it, and then we start to move down a bit. We do come back to test the 20, get above it, but it looks unconvincing to us. And we come back through, have another poke through to the downside, okay? And then we've gravitated back to the 20-day moving average. Now, for us, this trade hasn't really produced anything at all. It's kind of losing momentum to the upside. The commercials and specs are still buying and selling against each other. This here just looks like a natural correction to correct oversold. See stochastic RSIs come up outside of 20, outside of an outer band. Now we're at the mid. So basically the 20-day moving average, I think she's a sell. So where would you want to come in? My own view is through this level here. Okay, so basically through there. Okay, so double trend line support at the moment, and we're at the 20, so we can see if she's going to fail back. Now, in terms of its a round number as well, through 88.70, I think is a good level to enter through, and then see if she runs. Now, in terms of this divergence, we're not really looking for support to be found here. We think the first support we found here. This is just from our experience of these divergences. Okay, 85.60. Then we think we'll overrun, possibly down to 82.50. Okay. Now, obviously, like I said, I'm using ambitious targets. So, using the COT. We have to see how things go because obviously things change. So, in my view, plenty of downside. Even to the first target would look good. Where would you want to put your stop? Well, I think your stop is certainly, well, I say certainly, I'd be confident of a stop at 90.70. Okay. And you generate about a 2-to-1, okay, on your first level, and obviously more if we get to the second. You might want to be a bit tighter. If we do come through 88.70, that red candle there and that blue candle body at 90, stick the stop at 90.35, okay. And I think, looking at it, if we do come through, are we going to get back above this level? I doubt it. I think it could be 90.35. It's a nice risk reward then. And for me, just a correction of oversold. This hasn't developed into a downtrend yet. We've seen some downside action, but for me, it hasn't been that convincing. I think it will become hopefully convincing, and we'll get a decent risk to reward trade. So right, let's move to the final chart. On our last chart, which is USD DKK. Now, in terms of the DKK, it is a proxy to the euro. And I've discussed this in a couple of previous videos. A proxy currency is simply one correlated to the main. Okay, so the euro is the main currency. DKK is correlated as proxy. So is the Norwegian krona, NOK, Swedish krona, SEK, and also the Eastern European currencies, PLN, Polish zloty, Hungarian forint, and Czech krona. Now, our view of the proxy currencies is we're euro bears, okay, but we don't really like trading the euro. Well, I've always said, it's a fairly choppy pair, a lot of speculators in there. I prefer other pairs, and if I want to trade or I have a view that the euro is going down, I'll trade it against like JPY or a proxy, and I like the look of this one. Okay, why do I like the look of it? It's to do with the chart formation as well, okay, or the way the setup is. Okay, I've got bullish bias, but we've broken the trading range. Okay, it's been in place since July. Blue candle slices it out. Now look what we're doing, traveling sideways with very low volatility. Now, we've tested the previous resistance, which is now support, traveling sideways. Okay, and basically, I like tight sideways action, trading a breakout on higher volatility that follows through. So what I want to do is look and see if we get a breakout here and we follow through the upside and probably we'll come through this candle high here. It's a nice big blue candle to the upside, and we'll go long. Up until now, we've been really focused on USD NOK, which has really run up. I think this one could play catch up. Now, where are we going to go? Basically up here. There's a lot of speculators to be hit. There are no CFTC net traders positions for the DKK or any of the proxy currencies, but you can work out what they probably are by just looking at the CFTC positions in other currencies, which I'll explain in another video. So basically, we're looking for a nice aggressive move to the upside and follow through. Where do we want to put our stop? Well, you got 20 days sitting back here, and you got a couple of tails and a couple of bodies. I think back behind that level. Okay, so you got a decent risk to reward. Okay, you are looking through for follow through. You know, if you don't follow through strongly, you have to see how it goes. But you know, maybe just come out and try again. You know, this is my view as of right now. I'm expecting strong follow through. Now, in terms of just more minor currencies, I know regular viewers probably get bored of me saying this, but look in the minors, because you very often get better opportunities than the majors. And if you look, we've said the NOK was the one we wanted to trade rather than the euro short. We're going to trade the USD NOK long. Pip spread's a little bit wider, but the profit potential has been much better. Okay, so they're the 5 currencies I've focused on today. Obviously the 2 yesterday, Euro JPY, USD JPY, just very bullish. The USD and JPY, that stance has worked well for us over the last few weeks, and obviously I hope it continues that way. Right, that is the video for today. Thank you very much for watching me. Take care and have a good day.